private sector banks. You said that, while you're traveling, you sort of found that the distress in retail is visible. Tell me more about it.
Let's first start with the results, right? Results Q4 last year and Q1 this year. You can see that MFI is still struggling, right?
Correct.
Every quarter, some new state impositions, some new impositions, and some new state creates a rule saying आप पैसा collect करोगे तो वो criminal offence हो जाएगा. Very difficult to run a business if collecting money is a criminal offence. Then the credit.
So what does that mean? So you're saying they are loosening the stance on collection, or what?
The states are making it harder for MFI lenders to go and collect money. Right. Every state says, "नहीं boss, legitimate collection तो मैं discourage नहीं कर रहा." But try being an MFI lender who has to go and explain in a village in Karnataka or Bihar that what I'm doing is legitimate. What the state government announced is something else. It's hard, right? And therefore NPA numbers, I think, will remain a challenge at the grassroots level. Thankfully, there are no elections around the corner, right? Barring Bihar, stress is showing up. SBI cards numbers are evident, are available for everybody to see. In Q1 results, you could also see used CV financing में the stress showing up in used CV financing. Generally, logistics industry is a industry linked to the economy. If economic activity is subdued, naturally logistics struggles and CVs struggle. Interestingly, in the 1Q results, I was surprised to see even in mortgage finance, the first signs of stress show up, right? And I was very surprised to see that. I thought mortgage finance mein stress ek saal baad aayega,
right?
But you can already see mortgage finance mein stress build up. So we did some inquiries on that, and what we are hearing from the DSAs, right, the direct sales agents who originate loans for banks and NBFCs, they are saying first check bounces are at 10-year highs. And interestingly, Mahalakshmi, they're saying first check bounces are in 10-year highs in the big tech centers, jaisa ki Bangalore, Hyderabad. So when I asked them, they said what happened was in Bangalore, places like Bangalore, Hyderabad, during COVID, a lot of the double income tech families, they bought larger flats because both partners were working from home.
Right.
And now that the job situation has turned adverse in tech, those families are finding it hard to keep up with both personal loan repayments and with mortgage finance repayments, right? So this is going to be a very interesting space to watch. If the tech job losses continue, and my readings also financial services maybe ho raha hai. The financial services players are being a little bit more reticent to make that public. But if you look at the annual reports of the big banks, the big NBFCs, you can see that
the count is going down.
So you can see that they're opening thousands of branches, but headcount niche ja raha hai. So this jobs piece and the interplay of that with secured lending will be interesting to watch. The RBI's financial stability reviews continue to flag challenges here. My reading of the December 2024 wala financial stability, my reading of that was roughly 1 in 10 middle class households has taken on home loan, vehicle finance loan, multiple credit cards, multiple personal loans. And when I did the maths basis the financial stability review ka data, my reading was 1 in 10 middle class households will not be able to repay their loan, right? Because the weighted average interest rate on that is well ahead of whatever their wage growth is. तो उसको debt trap बोलते हैं. And I haven't seen this situation before in India, but this is I think this is a tricky situation. And my reading is SBI, HDFC, ICICI. These banks seem to be holding their own on asset quality. Barring that, pretty much everybody else is now on a very sticky wicket.
A typical Bangalore, household, from which bank are they more likely to take a mortgage finance? It would be one of these three banks. So how is it that stress in that section cannot reflect in terms of NPAs in these banks?
I think that's the clever part in lending, right? So what makes one of the reasons we've stayed invested in HDFC Bank through thick and thin is exactly this point of view. A lesser lender will use heuristics such as, this is a tech worker from Bangalore, isko to home loan de do, bada loan de do, because it's a tech worker from Bangalore. And HDFC Bank has, I think, far cleverer underwriting, and therefore they're able to do that second, third layer, yes, he's a tech worker, but tech jobs are not forever. And given his income and her income, given the family income, these guys are leveraging themselves up to a point where we are uncomfortable, and therefore let's encourage them to balance transfer out. Right? That's what a clever lender does. A clever lender will keep assessing risk in the existing book and saying if the risk build-up looks nasty, nudge the interest rate up. And I've seen this with Bajaj Finance across many cycles. I've seen this with HDFC Bank. If this cohort is looking risky, make sure that the interest rate becomes reflects the risk in effect. And if that leads to the customer balance transferring out, then so be it. Right? It's a tough skill, and it's a skill which requires both leadership, because you're encouraging riskier customers to refinance out, and it also requires obviously top class risk assessment systems. I'm not so sure beyond HDFC Bank and ICICI Bank how many other banks are on top of their game on this aspect, right? Both the risk, the metrics aspect, and then the credit quality management aspect.
But tell me more about it. For example, this job situation in tech has become clear only in the last few months. I'm not sure 1 year back or 2 years back if anybody was aware that AI is going to become such a big threat, or companies will not hire for whatever reasons, right? So if you are on a loan, for you to change the terms of the loan, even, I'm presuming most of the loans now are only on, floating rate. So you rejig according to whatever is the prevailing lending rate. You can't really change the terms, right? Like, how do you dissuade an investor and a high risk borrower to actually get out of the loan, to get that risk out of your book? Is that even possible?
So I think 3 levers that I've seen used, right? First is when an existing customer says, I want to take buy an even bigger house, take an even bigger mortgage, right? At that juncture, the lender has to make a tough call on, given his or her finances, should I be overextending myself? So at that point, there's a clear risk repricing. A lesser lender will say, Arey, this is good. This is a good customer, default nahi kiya hai. Rather than a 2 crore ka loan, he wants a 4 crore ka home loan. Let's roll out the red carpet. A smarter lender will be circumspect on that repricing. Right? This is the first trigger. The second trigger is when the RBI cuts rates and all other banks drop their rate, do you drop proportionately, or do you drop at different speeds for different risk cohorts, right? And a smarter lender will say, "ठीक है, RBI has cut rates by 100 bips. I don't have to pass on that 100 bips to every constituency in my customer base. The riskier constituencies, I'll keep them a little higher. And if that means they BT out, balance transfer out, then so be it. I'll live with that." And the third piece is on the new origination, right? Leaving aside the back book, on the new origination, if you're seeing Bangalore real estate is on fire, prices are going up, and households are leveraging up constantly with prices going up. You need a firm hand at the till, at the top, right? The boss has to make a call. Kitna humko bhagna hai with the rise in, with the bubbling up of real estate, right? And I would submit to you that the men and the boys, the women and the girls separate at exactly this juncture of the cycle, right? So what happened in the first 2 years after COVID, so December 21 say, sort of COVID, assume December 21 was roughly the end of COVID, till December 23 was like downhill racing. So if you're downhill racing, then a 1 liter engine ka gaadi and a Ferrari look the same. And a lot of people laughed at me saying, look at this moron. He's driving a Ferrari 4 times price to book mein. Hamari 1 liter 1 times price to book ki bank bhi utni bhag rahi hai, right? And they were right. And for 3 years we made no money on good lenders, right? And I sat there and we took the flak. And those who criticized that were right to do so. There's a learning for us there as well, that if the economy is going gangbusters, right? COVID ka revenge spending chal raha hai, government is growing capex at 30%, then what's the point of having a quality portfolio? Because lesser quality companies are also growing earnings at much the same rate, right? But then when the party ends, and Diwali 23, roughly, the party ended, and it's an uphill slope now, the going is tough, the Ferrari pulls ahead of the 1 liter engine ka gaadi, right? Now, some people will say, well, we will buy the Ferrari when the slope is upward sloping. When it's a downhill race, we will have a 1 liter engine. Those who can time the market like that, good for them. We unfortunately don't have that skill, right? We don't quite have that skill to say, economy is now soft, we will be buying HDFC Bank. Economy is now roaring hot, now we will sell HDFC Bank and buy a 1 times price to book lender with loose underwriting quality. And hence we suffered that underperformance. And then as the economy has slowed down in the last year and a bit, our portfolio performance has returned. And thank God for that.
You are still betting on Bajaj Finance, ICICI Bank.
Bajaj Finance, the position we reduced it dramatically as we sensed the cycle turning actually 6 quarters ago. Right, I remember doing lots of calls with my colleagues, traveling around Tamil Nadu, Karnataka, calling the office saying, यहाँ पे गया हूँ, कोयम्बटूर में गया हूँ, Bangalore में हूँ, Hyderabad में हूँ, doing calls with my colleagues back in the office saying clear signs of the asset quality cycle turning, and we throttled off on the Bajaj Finance position, and in some of our portfolios we moved the position from finance to FinServ, right? तो वो छोटा कर दिया हमने, which means that some of the rally in Bajaj Finance we actually haven't got the full benefit from it. But the HDFC Bank position stayed big, and we benefited from it. And in our lending, in our Kings of Capital portfolio, we also had ICICI Bank.